Hello there and welcome to another Easy as Income Tax presentation. In this presentation I'm going to start discussing the forecasts and estimates part of the program. This is what's made this program so unique. If I click on, I've got a couple of accounts here. I've opened up Mark and Sue. I just want to show you what happens on the default install. If I click Sue, it's going to open up and you will see that it's going to place one entry on the screen for us. It's going to have a dummy entry put here. All you simply do is you type over that as you earn your first lot of income. The system needs one entry to calculate because it straight away starts calculating tax amounts down the bottom here. And if there was no entry here, it would have a spit and it wouldn't know what to do. So we have it put one quick entry in place just to keep it happy. Okay, so what you do, it says type over me. So you just type over me. Now I'm going to exit out of here. I'm going to jump into Mark for a second because I've got 2 or 3 entries already in there. I'm going to bring the clock up. You'll notice that today's date is the 16th of January 2010. Because I'm basing this on the US, being the financial year starts the 1st of January to the 31st of December in the US, you'll see we're only into the second month currently at the moment of the financial year. Now you'll have a look here. I've put in there that I've earned a total of I'm earning income on a fortnightly basis. I'm being paid per fortnight, and I've earned $750 here on the 14th, and I've paid $120 in tax. On the 17th, I did a private job, which I earned $150. They paid me a check, and on the 24th, I've earned some more income. Okay, pretty basic stuff. Now, let's say I've come across here now, and because it's the 16th, let's say it's another fortnight, and I've earned some more money. So a quick estimate. I'm just estimating these guys. I'm just going to make that say it's the 12th of the 2nd. So what you do with this program, or this area of the program, is you would just record your income as you earn it throughout the year. This is really great if you're working full-time job with another job on the side, or you're working a couple of part-time jobs. As we know, a lot of people these days work 2 or 3 jobs just to make what used to be a full-time wage. So it's very hard to know if you're paying enough tax because one person's going to take a certain amount out and the next person's going to take a different amount of tax out, and you've got no idea if you've paid enough tax before the end of the year. And this is what this program's good for you. So enter the amounts in as you go along, and you can find out exactly week to week how much tax you should have paid. You're actually entering it. It's telling you how much tax you've already paid. It's telling you down here how much tax you should have paid. Now, if this here is more than this, you're laughing. The problem is if this becomes more than this, then you know, oh, I better put some more tax aside or I'm going to be in trouble. Let's say there's another $780, and let's say that they paid me another $120. I paid another $20 in tax on that. That was taken out by the employer. Now you notice as I entered an amount there, a calculate button came up. It's going to come up as soon as you enter another amount in, and it's going to, when you're ready, you can enter 2 or 3 lines in before you press the calculate. I'm going to say that's all I'm entering in for that day, and I'm going to click calculate, and then it's going to recalculate these figures for me. And it's done it. See, it's that quick. So it's done its estimates and it's worked it out that that's how much I've earned, and there's the amount of tax, etc., etc. Right. That's really basic stuff. What I want to show you is this program is not only just for estimates. It has a forecast capability. And then this forecast capability is quite unique. What it does is it looks at the beginning, the first and last date of the financial year. It looks at the date of the computer, so it knows how far into the financial year you currently are, and it uses all of that information to forecast how much money you're going to make before the end of the year. And it'll tell you a couple of little things which I'll show you in a second. Now, it's calculated here and I've gone, okay, if I click the forecast button, it's going to look at all the money I've earned to date between the 14th of January, between the 1st of January, that's my beginning of my financial year, until the last entry, which is the 12th of February. And it says between that date and here, I've earned this much money. But then it also looks at the date of the computer, which is the 16th. Okay? So it does an average between the 16th and all of this income back to the 1st, and it forecasts how many days are left in the year, and it tells you how much, if you keep going the way you're going, how much your income's going to end up at. Now if I click forecast, let's watch what it does. This screen will open up. You'll notice that the top half of the screen is basically almost the same information we just had. If I click back here, see this information here? It presently is exactly that same information. The only additional information it's going to give you straight away is that it tells you your current income tax bracket that you're currently sitting under is the 10% bracket based upon that amount, and it will tell you if you have a shortfall. A negative may mean you're in front. So currently I'm in front $114. Right, that's pretty basic. If we have a look down the bottom half of the screen, it talks about a forecasting tool. It's taken all of this income we've earned to date, checked the beginning of the year, checked how many days were left in the financial year, looked at today's date, and it's done a forecast and said if we keep going the same pattern we've already done for the first 6 weeks of the year, it anticipates we will probably make somewhere around $19,500, which means by the end of the year it would have placed us in the 15% tax bracket, and our potential earnings to come, we've already earned this much. It says for the rest of the year, from now to the end of the year, we're possibly going to make an additional $17,000. It just tells us that. It's just a sum. That minus that is that. Pretty basic stuff. And it tells us we will end up paying about $2,500 in tax. It forecasts the amounts for us, and it will provide us with an alternate percentage rate. You see at the top here, our tax bracket is currently 10%. Now, when we're earning these sorts of figures, I guess this alternate rate isn't going to make much difference. If we're putting aside the minimum amount, we're going to be pretty safe. But what if we're earning large amounts of money and we're earning $40,000 and $50,000 and $60,000 per annum? We start jumping up into 30% brackets, the 40% brackets, and what happens is, as we earn income throughout the year, we begin to get used to living a certain standard of life. And we might only be taking 20% out of our pays, putting it aside out of this extra money we're earning for tax. And what will happen is we haven't allowed the full amount, because by the end of the year we should have been taking 40% out of some of our money, and we're going to end up with a big bill. So what this says is, when it knows we're going to earn a large figure, this amount will go up. Now, let me jump out and I'll show you.